Taxes. Hey everyone, it's Zack Beck. 2020 was a tough tax year. Millions of Americans were impacted financially because of the pandemic. Whether you lost your job and had to take unemployment, perhaps you actually received an actual stimulus payment from the federal government, maybe you had to take a PPP loan, perhaps your business was closed, maybe you lost hours at your job, or you had to take on a new side gig requiring you to file as an independent contractor. Whatever it is, a lot of confusion is associated with the last tax year. So the IRS is giving people a bit more time. In a recent announcement, they have decided they are going to extend the tax filing deadline from April 15th, 2021 to May 17th, 2021. This change will afford everyone with more time to get their house in order so they can assure themselves they're filing their taxes correctly to be able to receive the type of refund or pay the type of taxes that they owe to make sure they're financially whole. So what I want to do in this video is break down in detail a lot of the new changes associated with the tax filing for the tax year of 2020 that you're going to be doing here in 2021, and also the specific steps that you can take when receiving finances back from the government to help you move forward and achieve your long-term financial goals. So let's take our time, dive into the details, and jump into it right now. As previously mentioned, the IRS has extended the tax filing deadline from April 15th to May 17th. Now, the IRS has been underneath a significant amount of pressure recently. Having to deal with the pandemic, just like all other organizations, they had people working remotely, had less staff on hand, and generally speaking, the IRS is almost always underfunded, so they're not the fastest processor of most tax returns, and also in general, they're not very technologically advanced. So what happened is last year, they were slow to process tax refunds for 2019 and increasingly slow going into 2020 because they had to issue stimulus payments, deal with the CARES Act, and now they're dealing with a new stimulus process called the American Rescue Plan. So there's a lot going on right now. So as a result of that, what members of Congress did is 100 members of the U.S. House of Representatives signed a letter and actually sent it to Charles Reddick, who is the IRS commissioner. They requested that he would extend the tax filing deadline so that way people would have more time to get their financial house in order, because it's not just the IRS who's dealing with confusing time right now. Millions of Americans just trying to process what happened last year are trying to put everything in a situation where they know they're filing their taxes correctly. So in doing so, what Mr. Reddick did is he said that he would extend the deadline until May 17th, and in a statement he said that he wanted to provide more time for individuals to get everything in order. So generally speaking, you have a bit more breathing room now to actually send your taxes in and make sure they get in there by May 17th. An important thing to be aware of is that this extension only applies to federal tax returns. So if you have to file taxes with your state, you'll want to check with them to make sure that their tax deadline has not been changed, or if it has been changed, make sure you fall in alignment with that. Also, if May 17th isn't enough time for you, you can actually ask for an extension from the IRS. And what you need to do is you actually need to file a Form 4868, send that to the IRS, and your filing deadline will actually be extended to October 15th, 2021. And by doing so, you'll have a little bit more breathing room and a little more time to get things in order. Now, if you do estimated quarterly taxes, you'll actually still need to pay those on April 15th. Whereas if you're paying basically on an annual basis, which applies to most individuals, you have until May 17th. Now, the American Rescue Plan actually made some significant changes to our tax code. What they did is they actually allowed individuals who received unemployment benefits due to the pandemic to actually have those first $10,200 of unemployment benefits declared tax-free. So if unfortunately, because of the pandemic, you had to receive unemployment benefits last year, those are tax-free up to $10,200. Now, if you've already filed your taxes and you might be a bit concerned if you need to actually go and change them, fortunately, you do not have to do so. Normally, if you actually had an issue with your taxes, you could file an amended tax return, which would be a Form 1040X. But in this instance, the IRS is specifically saying that you should not request to actually file an amended tax return if you've already filed your taxes, but you have some sort of benefit associated with the American Rescue Plan, specifically when it comes to those unemployment benefits. And that is because the IRS is inundated right now with processing returns, also with issuing stimulus payments, and just generally speaking, they're still backlogged from last year. So in that sense, if you're going to benefit from this new $10,200 $200 deduction or not having it included as part of what your normal income would be, make sure that you do not file an amended tax return. And this new tax waiver will be different depending upon if you filed physically or if you use some sort of software like a TurboTax or something like that. But like I said before, if you've already filed your taxes, and now since the American Rescue Plan has become law and you could benefit in some way, shape, or form, just sit back and watch for additional guidance that might come out from the IRS, but they should be able to get you that payment to you and make sure that you're not taxed on that $10,200. Another significant change the American Rescue Plan made into the tax code was actually extending the child tax credit. What they do is they allow individuals to receive a child tax credit for $3,000 for a child the age of 6 to 17. Now, if you have a child underneath the age of 6, you'll actually receive a tax credit for $3,600. So you should expect to receive those credits in monthly installments starting this summer. So that's a huge change that's going to impact you from a tax perspective and hopefully provide you with a bit more financial relief and take some of the pressure off financially having to deal with everything that was associated with this pandemic. Now, on the note of receiving all the finances that you're due from the federal government, if you did not receive your stimulus payment last year or any of the stimulus checks that were owed, make sure that you file your taxes because this is super important because there's actually a section on your tax filing where you can say that you did not receive your stimulus payment and the government will include that as part of your normal refund. So in that sense, it's very important that if you did not receive your stimulus payment, that you file you file the information correctly with your upcoming tax returns so that way you can receive it. I can speak to this personally because I actually did not receive my stimulus checks back during last year, either the first $1,200 or the second $600 one. So I made sure I included that information on the tax filing that I did, and then I actually already received my stimulus payment as part of my refund this year. All right, now that we have a better understanding of what is happening with the tax filing for this year, having it being extended to May 17th, as well as the $10,200 tax waiver coming to unemployment benefits and the child tax credits associated with the American Rescue Plan, what I want to do is share a few tips that you can actually use right now if you're moving forward to file your taxes so that you can boost your refund and actually receive as much money as possible so you can actually move forward and allocate that into areas that will help you grow your net worth overall. The first thing you want to do is think about your filing status. Whether or not you were married really has a direct impact on your financial ability to either claim certain deductions or be able to receive certain tax breaks. So make sure that you fill this out properly. And it is not always the best to actually file jointly if you're married. It depends upon your income and also your status. So from that standpoint, you really want to take that into consideration, but make sure you get that correct and put in the information, especially if you're trying to claim a child tax credit or if you're trying to do something different with your taxes. But make sure you think clearly about what you're going to do for your filing status. One thing specifically to think about when you're married filing jointly is, let's say one of the spouses has an issue and has a lot of medical expenses associated with COBRA. It actually might be better to actually file your taxes individually because then you could claim more deductions for that individual. Now, oftentimes the individuals who are filing as a joint married couple are going to receive the most tax benefit, but it's just something you want to be aware of. So do your investigation, take your time and think about that before you actually move forward and file your taxes. Another thing you want to think about is what type of tax deductions might be available for you. Now, this is often overlooked. Generally, you take the standard deduction. That is most often the case going to be the best for most individuals. However, if you take the time to actually calculate what deductions are out there, you might find that you actually save more money by doing itemized deductions. So in that sense, there are a few things you want to look at. The first would be your state sales tax. Oftentimes, you can go through the IRS and use their calculator to determine how much state sales tax you actually could deduct. The most important step you can take to boost your tax refund is to claim the like button for the YouTube algorithm. I'm just kidding, but if you wouldn't mind tapping the like button, that would actually help the channel out a lot. And also, it doesn't cost you anything as a taxpayer. It doesn't add anything to your overall tax liability, but only help other people to be able to file their taxes even more efficiently so they can save money and actually achieve their long-term financial goals. Furthermore, your reinvested dividends could actually be considered deductible, so you want to take that into consideration if you're investing into the stock market. Furthermore, out-of-pocket charitable contributions are also deductible as well. One thing that happened in the CARES Act is they allowed individuals to deduct $300 of your charitable deductions right off the top. So that is a nice thing that could occur, but also there's a little bit more nuance there where you could find more deductions as well. Most people overlook this, but you can have your student loan interest actually be part of that deducted from your taxes. Now for parents, child and dependent care can actually be considered deductible as well, all the way up to $6,000. So if you're paying for childcare, you can actually deduct that, like I said, up to $6,000, which could be very significant. Now, the Earned Income Tax Credit is applicable to individuals at a lower income threshold and can be worth up to $6,600. So this is really depending upon your income level, but it's something you'd want to investigate prior to submitting your taxes. One thing that is often overlooked is state income tax that was paid last year. If you had to pay state income tax last year, you are actually allowed to deduct that up to $10,000. So that's pretty interesting. It's often overlooked. It requires a bit more nuance, a little more research, but that's just something you might want to be aware of. One thing to be aware of is you want to keep very good records if you're going to go ahead and claim any of these deductions, because if you get audited by the IRS and it's found that you did something illegal or you actually claimed something you weren't supposed to, you could be in trouble. So I just want to say I'm just a guy on YouTube. I don't have all the answers. I'm just trying to give you some information that hopefully could help you, but you might want to take some time and look into this to determine whether or not a standard deduction is going to be better versus going and actually itemizing your deductions, but it's going to be a case-by-case basis. So I just want to give you as much information as possible so you can make wise decisions for yourself. Now, I often talk about the importance of having an IRA so that way you can actually begin investing for your retirement and secure that long-term financially for yourself. Furthermore, if you want to invest into an HSA, a health savings account, you have some flexibility going into the tax year. They are actually allowing you, the IRS is, to be able to continue to contribute into your IRA or into your HSA and maximize your contribution until April 15th of 2021. So in that sense, you might want to consider doing so. I'm not sure if this has been extended to the May 17th deadline. I couldn't find that answer for you, so it's better to stick to the safe approach and look at April 15th. So if you want to maximize your contribution into your IRA, which would be up to $6,000, or into your HSA, which would be $3,500, consider doing so. And the HSA is a triple tax advantaged account, is really beneficial for your finances, but also it allows you to actually have money set aside for medical expenses. And an IRA is a great tool to actually be, again, investing long-term for your overall success. And you can have it in a Roth form or a traditional form. I personally have a Roth, meaning that it's post-tax. So in that sense, just do what's best for you, but when you actually contribute into an IRA, it's something that helps to lower your tax threshold and liability, and it can help you long-term for your finances as well. The last thing you want to be aware of are tax credits. They're generally even better than tax deductions, but you need to do the research and try and find out what is applicable for yourself. But if you take time to actually understand what tax credits exist, it can really benefit you financially. Like I said, there's a lot of tax credits to be aware of, whether that's the Earned Income Tax Credit, the Child Independent Care Tax Credit, also the American Opportunity Credits. There's so many things to be aware of where you actually are leaving money on the table if you don't claim it. So just think about what exists for your particular financial situation and try and claim those things out. You can actually make sure that you receive everything that you're owed. There are also tax credits generally associated with making your home more energy efficient. So think if you're getting solar panels or doing something else, you generally can receive tax credits, not just at the federal level, but even at the state and local level. So there's a lot of incentives out there that exist if you're savvy and try and find a way to navigate to do things that are best for yourself financially. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. Help push this video to other people who might need to hear it. Furthermore, if you wouldn't mind, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf so you can make well-informed tax decisions moving forward that help you achieve your goals. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.